This is Rod Kusin, Spooman for Risk on Tuesday, June 28th, 2011, all times on the chart. Our Central Standard Time. We're running a few videos today to review some of the features of our new trend strategy for 9.0, TradeStation 9.0. Good results so far this morning. A couple of interesting developments that are going on right now relative to the VIX, and we wanted to highlight these. Let's just take a look at what's happened so far. We really had our first trade based on our strategy settings right in here just prior to 9 o'clock, right in there. Nice long trade that hit our profit targets. We have some retracement points at that level as well, so we may be coming back down later on this morning. We had another trade then after this first trade hit its profit target. Market came back down. We grabbed another point or so from that trade. This indicates here that the trade broke even. Right after that, another trade on the way up hit both profit targets, and then the market started to flounder, and this trade didn't make it. And if you were manually trading, you would have seen reasons why you could expect that that trade would fail, and that's what we'd like to talk about. Now, for one thing, as you can see, right after that trade took place, we had some negative volume coming into the market. These red bars here on the 3-minute, the 7-minute, the 12-minute are pretty much all indicating the market's kind of coming against us as far as the long, although I think we still have room to go back up. But what we'd like to take a look at is the VIX, because if you know how to read the VIX, you could have seen what was about to occur. So we're going to bring the VIX into the picture here. The market moved up at around 943 to a high, kind of tested that high at 948 into 950, roughly, 948. And let's take a look at what happened to the VIX during that period between roughly 943 to 948. Now here we're tracking a 1-tick VIX with both a stochastic and a z-score. And at 942, all right, 942, the VIX hit a relative high, all right. VIX went up to a price of 1974, started to come down. So we saw a little bit of a move up in the market as the VIX dropped here. But then as the VIX came back at 945, the price of the VIX again was at 1974, same as it was here. But by 948, the VIX was at 1979. That was a telltale sign that the market was going to come back down. Why? All of our studies on the VIX indicate that, generally speaking, and this is like 90% of the time, if the VIX goes higher, in other words, you make a comparison. You see where the Spoos are. Spoos, say, come down to this low, they test the low, and then they turn back up. So measure the low, the price of the Spoos, look at the price of the VIX. If the VIX goes higher but the Spoos do not immediately go lower, rest assured that they probably will. High probability. So when we had that long trade in there, which was a little bit premature, and the VIX came up, started to move back down, fine, that's nice to see. We want to, and we expect that to happen. But now the VIX comes back up and even goes higher than it was before. probable change in market direction, very high. Tighten the stop if nothing else, and more than likely take profits, get out, and wait for another opportunity. Because that's just exactly what happened. And that is typical. There's nothing unusual about that. That's what we normally see occur. Now, we come back up here at around 950, 951, and let's take a look at where we're at on the Spoos. So at that time, Spoos have dropped to a low of 1285.75. And they move up a little bit. But then they come right back down. And now they're a little lower, 85.50. 85.50 right in here at 953. Now, can we expect the Spoos to go lower? Is there anything that might tell us that with regard to the VIX? We're not even going to look at volume right now. But 1285.50, that was the low at 954. Well, at 954, the VIX is still moving up. Okay, the Z-score hasn't really turned yet. So we may expect that the Spoos will continue to drop at least a little bit. And here at 955, we should be at 955. We should be at a lower low. And if we're not, we need to wait. Let's look. At 955, we're at an equal low. Technically, we should be at a lower low. VIX is higher. So really, the suggestion is we really ought to wait. Why? Because statistically, if the VIX is higher, the Spoos normally should be lower. So now let's take a look again. 955, VIX is at 1993. Test 1993 at 957. Normally, we should be lower. But with due respect to our indicators, we've got a nice divergence here. We're at a lower low on the VIX. The Z-score is divergent in respect. The Z-score is not as high here as it was here. But we're at a lower low on the Spoos, so we could see some drop in the VIX. We do. It doesn't go very far, and before you know it, we're heading right back up again. So even if you took that trade, all you had to do is just watch the VIX and see if it's starting to climb back up, which in fact it's doing. So by 9:59, just before 10 o'clock, VIX is right back to where it was before. So here you are, 9:59. VIX is continuing to move up. No reason to be holding this trade. Now let's see if we can pick off this bottom here in anticipation of a move up. Just around 10 o'clock to 10:06. Watch what's happening to the VIX. So here you are at about 10 o'clock, 10:01, 10:02. The VIX is still moving up. Look at the Z-score. Then at 10:02, Z-score begins to move down. Possible time to take a trade. 10:04, VIX goes a little bit higher. 10:05, 10:06, VIX hasn't gone any higher, and now look at the Z-score. Z-score is clearly starting to drop. Your stochastic is clearly starting to drop. Now, granted, this is a one-tick VIX, but believe me, you need to pay attention. VIX does not move that much, and when it does move, there's generally a reaction. So the VIX starts to move down at 10:06. Certainly an indication that the market could begin to be moving up. Now, while we normally do not look at this situation with respect to volume as a good opportunity to trade, the VIX is compelling. No doubt about that. The VIX is compelling. Okay, so here we are. You see some positive volume going into the market right in here. See the green bars on the 500, 300, the 100. Just beginning on the 1-minute chart, but we're still negative on the 3, the 7, and the 12. But right in there could be an opportunity for a long trade, just based on the VIX. Now at 10:18 we get a short trade. Now why is that? Well, good reason. I mean, the VIX is beginning to move back up again. VIX is moving back up at 10:18. But come to 10:20, right in here, VIX is moving back down again. So if you took the trade at 10:18, you got to be paying attention to what's happening to the VIX here, because come 10:20, VIX is starting to move down. And sure enough, boom, the market comes right back up. So manually, you could have seen that. You could have seen good time, protect your position here. There's liable to be a move up on the Spoos after you've taken the short trade. Okay, so the VIX is very important. That's what we're driving at here. VIX is very important, and you want to pay attention to that when you're trading. Keep an observation of the VIX. We have on our chart here, we've thrown the stochastic of the VIX in one of our subgraphs here. Now you can also add the z-score of the VIX into your primary trading chart if you choose to do so. But it's a very simple thing to do should you want to have that data on the screen that you're watching while you trade. And we have a lot of other indicators that are on this chart. They can be removed or added at your discretion. But that's just a little bit about the VIX this morning. We'll continue to monitor this with another video. But so far so good. The system is working just the way we expect it to be working. And we encourage you to come and take a demo of the new trend strategy for 9.0. We've got some very interesting features that we're using in conjunction with our volume indicator, z-score, on a variety of different data feeds, different intervals, increments, and so on, which help us to identify high probability trading opportunities. This is RSKsys Intl for Risk.